In the past month, the price of Bitcoin has been cut in half. It dropped from nearly $65,000 in mid-April all the way down to briefly hitting $30,000 yesterday. Of course, a year ago, Bitcoin was under $10,000, and if you told most people that you thought it was going to be at $30,000 within a year, they'd tell you that you're a loony crypto dude, and they'd go back to counting their gold bars in their basements. But is this the beginning of the end for cryptocurrency as we know it, or is the great cryptocurrency crash of 2021 just another blip? Some perspective here. Yesterday's low price took Bitcoin all the way back down to where it was trading less than 4 months ago. And Ethereum is back to where it was less than a month ago. So what happened? Is it the new regulatory concerns in China? Is it Elon tweets? Is it good old-fashioned fear, uncertainty, and doubt? Did speculative investors just get nervous, or is Bitcoin and crypto in general just super volatile? Well, a little of all of that, but in the past 11 years, Bitcoin has crashed by 20% or more than 50 times. Today on Dumb Money, we're going to reveal our moves, the things that we've done in our crypto portfolios, plus some unconventional trades, and we're going to take a look at the psychology of crypto investors and explore why Bitcoin and Ethereum might be on an inevitable path to becoming too big to fail.
We are Dumb Money. Three friends who turned $30,000 into $30 million using nothing more than Twitter and a zero commission trading account.
The suits that work on Wall Street, they call those people the smart money. That's not us.
Our goal is to help level the playing field for everyday investors.
We are Dumb Money.
Hey there, Dave here on location in Mexico City, along with Chris and Jordan holding down the fort at home. We are Dumb Money. Welcome to Dumb Money Live. Before we go all in crypto, I need you all to first go all in on the like button. A simple tap will probably make Bitcoin and Ethereum go up another 10% while you're watching this. Chris, Jordan, every time I get on an airplane, it seems something major happens in the financial markets. So here we are, down 40%, up 20%. I was sending my money to Coinbase and Robinhood as fast as they would let me. I was buying the dip. I want to talk about that, but first I'm curious what you guys have been doing.
Hold on, in the last 10 minutes, it's dropped like 4 or 5% too, which is kind of odd.
Oh, well, everybody hit the like button. Pump that price back up.
Pump that price up.
Oh, what? Wait, what?
I don't know.
Well,
I literally don't know what's happening right now.
The news just came across that the Treasury is calling for crypto transfers over $10,000 to be reported to the IRS. That is just a headline that has just come across in the last few minutes, and I'm guessing that is helping this sell-off sell even more.
That seems like, that's like non-news, right?
It sounds like algo-driven crypto news, right? It's algo-driven crypto news. Guys, quite honestly, I have never been more interested in the crypto story as I am right now today. And you know that I've been thinking about this and studying it for 4 years, guys? Have we been talking about just the crypto movement, trying to figure it out? And what I love about us three, and for those of y'all that are watching for the first time, we must be the most unbiased crypto investors in the world, meaning we do not have any bias. We don't really care one way or the other what happens with crypto. We're trying to look at this so objectively over the past few years, and we argue with each other constantly. We debate. We look at all sides of the arguments. We have very good friends that are the biggest crypto bulls I know. We also have very good friends that are the biggest crypto doubters that I know. And we're constantly having these debates, thinking about it objectively. And I think that I've never seen the crypto market as clearly as I see it right now. And that's what I want to talk about on today's episode. But I think we have to go back and just talk about how we got here and what has driven crypto to this point where it is today. And I don't think we could have that conversation unless you understand the psychology of money, the psychology of the crypto investor, right? And why they're here. Like who is this cult and what is motivating them, right? What is the culture? What's driving them? Like what's driving them to sell when they sell? What's driving them to buy? What's driving them to hodl? How strong is their will to make this work, right? How big can this movement get? Because it's a movement, right? That's what it actually is. And it's if you don't understand that, you do not understand how to invest in this space. By the way, we're not financial advisors. These are our ideas. This is why these are the steps that we're taking to trade crypto. Please do your own homework. And after today's episode, please poke holes in our thesis on the Dumb Money Discord, dumbmoney.tv/Discord. And guys, this is probably the biggest counterculture movement of my lifetime, right? Would you agree? Of our lives, crypto is the largest counterculture movement. And to a lot of the people that are in crypto, this is their identity. And I think unless you understand movements, unless you understand what it's like to be part of a tribe, you'll never fully appreciate this movement, because this could be the largest tribe on earth. This is as strong as, I think, some of the strongest religions in our history right now.
I think if you look back just as recently as a year ago, crypto was still kind of in two camps: those who were crypto people and those who had heard of it but stayed away from it. And a little bit of dabbling of, putting $100 in here and there on Coinbase or whatever. But I feel like those two worlds are colliding right now, and the mainstream, it's just becoming more normal to be a crypto person, even if you're not a crypto person, right? It's more normal to have a portion of your portfolio diversified into this asset class that is crypto. And I know that of the three of us, Chris and I have both been in crypto for years, and Jordan has been kind of not, but I think he's starting to even get into
Dave has been in
it as
crypto for years. Chris got in.
No,
probably like
I was in with
ago.
Dave. I've been in with Dave as long as Dave's been in. Me and Dave got in this together in 17?
Bought for the first time last year.
No. I bought for the first time when Dave, back in 2017.
Oh, that's right. Yeah, I remember you did that, and then it crashed.
And we had a bunch of crazy coins, and we were, buying weird things we've never heard of.
But understand, this is every generation has what they stand for, has how they come together in a movement, what they battle for their entire generation, right? What they stand up for, what they come together to fight for. And I truly believe that this is surfacing as the largest movement, the most sustainable largest movement of this generation, potentially even larger. Ultimately, I think it might become larger over the next decade than the green movement. Okay, which you can kind of say was the older millennial movement, right? Of the older age millennials, kind of the green movement was kind of what they came to fight for. This is about more than money. It's about hope, right? Like, I think the word hope. I think if you, and I want to say something right now that might be a little, I don't know if it's controversial, but we've mentioned it in the past, but I think it's time to make it really clear. The stock market is not rigged at all. At all. That is the biggest misconception, I think, of all time. Fiscal policy, on the other hand, monetary policy is completely rigged.
It's completely
to benefit
artificial.
me.
There's nothing real behind it.
But it's rigged to benefit people like me, Dave, and Jordan. Okay? We are benefiting from the largest rigged system in my lifetime, which is our monetary and fiscal system. Okay, it is rigged. I don't
know if it's like purposefully rigged to benefit.
It doesn't matter.
But I do agree that the effect benefits people like us that are investing.
It is 1,000% subconsciously. It's not so purposefully rigged, Jordan, in terms of like, hey, we want to help the investor class by not failing. But at the end of the day, it's rigged in terms of it's just like a snowball that you can't stop, and we all know we're benefiting from it, and no one is willing to put an end to it, and no one's willing to even discuss it that often, right? Like, even within our circles, we all kind of know it.
No,
but
I mean,
very
if you
few
read
people
about it, like it's actually pretty easy to understand how we got here and what people are and why the Fed behaves the way they behave, because they've seen disasters in the past, and they're basically trying to avoid those disasters going forward, right? And so they feel like they can pull certain levers and do certain things, and they've learned that if they pull this one lever while this happens, that then you get a disaster. But what ends up happening, is like Like you said, it
Well,
benefits people like us.
And when I say people like us, the investor class, you just can't go wrong. I mean, the investor class has had everything going for it for the past 30 years, and more so today than it ever has when it comes to monetary and fiscal policy, to the extent that it's become so insane that you almost can't lose by being in the investor class. Everything is rigged for you. I mean, even last year,
you can lose on
it was
individual
so
investment. But the overall movement is if you aren't an investor, you are falling behind the people who are sitting with cash or working paycheck to paycheck. There's a whole different class of society that is benefiting from being an investor, and that's where we're saying the monetary policy is rigged.
People that benefit from having equity stakes, right, in equities. And it's not just investors. Listen, management that have huge equity stakes in the companies that they run, right? How many people, we won't name names, but we've been involved personally in so many large companies, and while we love a lot of the executives at these companies, we know who they are, we know what they deserve in life, and have seen them walk away with tens to hundreds of millions of dollars just purely based on being the benefit of this system where they have a large equity stake in a market that is overinflating equity prices for the past 15 years. It's disgusting in so many ways. It is so disgusting how people in the investor class, especially if they're levered, right, or if they're over allocated in the investor class, have benefited from this. And let me tell you something, guys, this is the backlash. The crypto movement is the backlash, because at some point people realized what was going on with fiscal policy and with fiat currency, and they said, you know what, we need a reset.
Almost the same way that GameStop was a backlash play, right? And crypto is the same thing. It's a new generation of investors saying the investor class shouldn't be the only ones who win. And there's this new thing that I say it's new. It's like I said, 11 years Bitcoin has been going through this crazy volatile cycle, but it has never seen a year like we've seen in the past 12 months.
And the biggest theme, the reason why we have on our thumbnail today, too big to fail, if you were to ask me anything about crypto right now, anything about crypto, the movement, where it's headed, where Bitcoin is headed, or where Ethereum is headed, my answer to you is going to revolve around one central theme. And that theme is that this journey is on a track that I don't think can be stopped right now, and it's on a track towards too big to fail. Too big to fail is one of the most powerful things in finance and economies, right? You saw what happened in 2008. You saw what happened in 2020. Our entire economy, our fiscal policy, everything is ruled by too big to fail. Last year, when our stock market started to get hit, the government started buying bonds, and we started to implement a policy to have our government buy equities just like China does. That's happening now. I didn't think that would ever happen, and that woke me up. And that made me realize the power of too big to fail. Too big to fail is such a big theme that if and when crypto, and it's on a road to get there, and when it starts to become systemic, not just in our economy, but in the global economy, when it starts to become systemic, there is no stopping it at that point. When do we get there? How quick do we get there is to be determined. Do I think it's too big to fail right now? I don't know. I don't think so. But I think we're on a roadmap to get to too big to fail. And you have no idea how big of a deal that is. Why? Because as soon as we start to get there, right now even, we all know, right now, the biggest risk to crypto, the biggest risk is government regulation. Okay, we all know that. There's a very small window.
In the time that we're on, we're seeing that crypto, this is just Bitcoin as a indicator for the larger crypto market, has dropped yet again because of this IRS thing. Now, large transfers, they're wanting to have reported to the IRS. just that headline spooked the market again.
Jordan, you're muted. You're muted. We have a small window, guys. We have a very small window when the government, I think, can still come in if they choose to, if they think they're capable of doing it, and put the cramp down on the world crypto market. And I think that is the largest risk to this trade right now.
But
it's
in
the
another,
government regulation.
another way, though, Chris, isn't the IRS having some clarity on the rules around crypto actually a benefit and legitimizing it as a real thing that is being recognized by our government as something that needs to be a taxed asset class? Like some clarity around that, whether it's going to be taxed as a collectible or a or normal capital gains or some other form of taxation. Like some
yes,
clarity
if that's
would
all they
actually
do,
bring good to the market.
If that's all they do, that's not a problem at all. We all know that that's not a problem. The crypto world can live with that. It might even thrive under that type of structure. What I'm telling you is there's a very small window. It's months to years. It's not 10 years. It's months to years that central governments like the US and Europe can come in and really put their foot down on this crypto movement. And if they don't, every day that they don't do it, is another day that crypto gets too big to fail. And the second that we kind of cross that bridge, it's all games. It's on. It's done. I mean, at that point,
it's allowing the Coinbase IPO, right? And so all these things you say that this business is legitimate by operating in the cryptocurrency space. Like Dave said, the tax regulations. You say, you know what, we're gonna tax. I mean, there's a checkbox on your IRS form right now that says, did you participate in cryptocurrency this year, right? So they're wanting to know. They're trying to figure these things out.
I don't even know what they're doing with that information. Is that just kind of a survey to see how big it is for them to say, oh, well, geez, we have like 80% of taxpayers checking that box. We definitely have to tax it now.
Sometimes you have to pull yourself on something like this. You have to really pull yourself out of the weeds, out of the noise. Because when I look at the crypto market and all the YouTube videos and all the conversation happening on Twitter, virtually all of it is you're too deep in the weeds. There's too much noise. If you really want to understand,
and very short term.
Very short term. If you really want to have a really hard look at what the hell am I going to do in this market long term, how big of a stake, how much of my portfolio am I willing to risk on this, you really need to pull yourself out and have understand the larger narrative here, where this is headed over the next multiple decades, right? And guys, I'm telling you right now, I see it so clearly that it's almost like I think of it like an inverse pyramid scheme. Normally when you have a pyramid scheme, right? Or when you have a multi-level marketing company, which we know very well, we've been involved with some of the largest MLMs in the world. We understand structurally who the people are that form them, what the motivations are. We've seen it from deep in the inside, so deep that we ended up getting out of that world, had major lawsuits. We have NDAs. We can't even discuss it. But I'm telling you, very few people in the world understand the mindset, the psychology of people that are running those types of organizations better than us here at Dumb Money. Okay, so here's the thing. This is not that. This is not started by a centralized kind of, hey, we are going to rip off, right, the common man, right, by starting something. I truly don't believe when Bitcoin was started, when Doge was started, we know that, when a lot of these things were started, that was the central idea. I think they came from a different mindset, right? But what has happened is it's kind of the reverse, to where it's starting with the people. It's starting with a lot of retail investors. Quite honestly, it's starting with people that live outside the investor class, right? A lot of the people that are in crypto were not part of the investor class, right? They're coming into the investor class with crypto being the first thing they have exposure to. They're young. They don't have big portfolios. But what's happening is, and I see it so vividly, that as it becomes too big to fail, and mark my words, the number one thing that institutions are looking at right now is this going to become too big to fail? Because the second they see it, nobody understands too big to fail better than banks. No one understands too big to fail other than financial institutions. They know it so well because they have thrived on too big to fail. Because it's the dirty little secret.
Benefited from it. Exactly.
Yes. As soon as they see this crossing that bridge.
I just want to back up for 1 second, though, because we teased that we would say what we have done, and I was thinking of this as for me, crypto is not going anywhere. This is not the beginning of the end. This is a buying opportunity. This is a pullback. And it could pull back twice as much as it already has. But for me, anytime I see this, it makes me want to buy the dip. And my only limitation for even being able to buy more is the platforms. I sent $100,000 to Coinbase, which was the maximum that they would let me send. I bought $50,000 worth of Bitcoin, $50,000 worth of Ethereum. I sent $50,000 to Robinhood, which is the most that they would let me send. And it is in limbo for the next 6 days, apparently. They gave me $1,000 that I was going to have access to, but that money is on its way so that I can buy Doge or whatever, I don't know. I just want to have money in Robinhood so that when Robinhood coin comes out or whatever, I want my money to be there. The news this morning was they're going to allow you to invest in IPOs. I want my money to be in these places, ready to pounce when an opportunity like what we just saw happens again. And so I'm already profitable. I don't know now that we've seen another dip, but the new Bitcoin and Ethereum I bought should be positive right now. But if it's not, I don't care. And if it goes further, I'm putting more money in today.
But why? Like the inverse pyramids.
Because I see this is even if it goes sideways or down for the next year, 2 years, whatever. Do you really think that Bitcoin, something in limited supply that is the brand name that represents crypto, is going to be worth less in 10 years than it is today?
Well,
As
no,
a long-term
David.
investor,
But the biggest driver, what's the biggest driver? The biggest driver of that.
Institutions. It's companies like Tesla getting involved, not just accepting it as payment, which that's
they don't
kind
anymore.
of a gimmick, but these other companies that are using it as another asset in their balance sheet. That is, as soon as we see more banks saying, well, yeah, we have to have Bitcoin on our balance sheet. We have to have Ethereum on our balance sheet. Ethereum, the transactional nature of Ethereum and the transition to Ethereum 2, I don't see either of those going anywhere. I see them as like the poster child for what is crypto. I see that is where the individuals are going, and I see that those are the two kind of brand names that the institutions are going to be able to have some confidence in going to their customers and saying, yes, we put some of our assets into crypto, but don't worry, we didn't do any of the weird ones. We didn't buy Doge. We bought the trusted Bitcoin and Ethereums. We bought the gold standard.
Size, understand something. This is a very simple equation. Very simple. Size and size alone will make the crypto markets too big to fail. I want to say this very clearly. As long as the crypto market finds new, whether you believe in it or not, and I can make a case that I don't believe in any of it, okay? I'm not saying I'm not like this crypto fanboy, but I'm pragmatic about it. As long as the crypto forces that be, and that's why I wanted to understand the psychology of who the core crypto pumpers are. Once you understand the psychology of who they are, their commitment to this movement, if you understand that and that alone, you will then gain confidence that they will continue to drive this larger. As it gets larger, it snowballs, because the larger the market gets for crypto, the closer it gets to too big to fail. As we start to approach too big to fail, we are going to start to see a cascade of institutional buy-in, because institutions understand that there's no power on earth bigger than too big to fail. And as we start to cross that bridge, that snowball happens. Once we get to too big to fail, the game is then over. It's over, because the last people on the pyramid will become the institutions. Ironically, unlike a normal pyramid scheme, unlike a normal MLM, the actual powers that be, the institutions, will be the last ones in. And at that point, it doesn't even matter how much more gain there is to get. in terms of being in crypto, because institutions actually aren't about making money so much on it. They're about making money on the transactions that live off of it. So the mere fact of putting 1 or 2% of your clients' money in on it, even if it never loses money or never makes money, they don't actually care. They want to be in on the transactional side of a too big to fail asset class. Okay, that's what you have to understand. It's not about them doubling their money in Bitcoin over 5 years or 8 years. It's about once it becomes too big to fail, it becomes a brand new global asset class that they could monetize by being on the transactional side for all their wealth management clients, for all their funds, right? For everything that they do. And so you just have to understand the roadmap. You have to clearly see. This is my thesis, right? It could be wrong, but this is the thesis that I have finally figured out for myself over 5 years, and very recently understanding this is why I'm in crypto. This is why I'm going deeper into crypto. It's not because I necessarily
and it's why I'm
believe.
holding my Coinbase shares. I'm not selling those because even though they're down right now, I believe in that as a transactional thing. They're going to be the first beneficiaries of that. Long before JP Morgan is going to be a beneficiary of transactional volume in the crypto space, it's all Coinbase.
For now, yes, and everybody will be in on it. That's the thing. Everybody, all the world's financial, entities will eventually come in on it as soon as they believe it's too big to fail. And guys, understand something. Too big to fail here means that no government will have the balls to do anything about it, because by doing something about it, it would be self-destructing their own economy, right? Crashing their own stock markets. What's the one thing we learned about crypto this week is that crypto moves hand in hand with equity markets. Not so much that it's too big to fail yet, but the second that the concept of crypto falling apart would also fall apart our equity market and fall apart our debt market and fall apart our housing market. The second that becomes clear.
I think you had some big margin calls, right? You had a big flash crash. You probably had some limit orders that were just sitting around, right? Just in case something like this happened, and they got taken out, right? So
Jordan, not when it's 10 times the size of where it is today.
Yeah.
You can't. You saw.
If it is,
So if the crypto
I don't
market,
know.
the crypto market, which was $2 trillion a month ago and is $1 trillion today, if that had started.
Dave, you got cut off. If it started at what?
The internet may have just killed us all.
Yeah, if it started at what?
Just Dave.
I'm saying if the entire market cap for crypto was $10 trillion, it would have a bigger impact on the equities markets and all of those other markets. And a pullback in crypto would start pulling down other things or causing other things to go up in an inverse relationship. But as soon as it has more of that correlation, that is where the too big to fail theory really does come into play.
But here's the kicker, guys. Here's the kicker. DeFi. Okay? And so probably the biggest storyline of the past 6 months and the most interesting storyline in crypto to me is DeFi, right? Decentralized finance. And what is so mind-blowing to me about decentralized finance, and for those of y'all that don't truly understand DeFi, we should probably do a whole episode on it, but it's essentially taking all of the conventional financial transactions, the ability to borrow money, right? The ability to financially transact for essentially anything, and pulling it out of the traditional centralized financial system and moving it to a decentralized financial system, which theoretically is more efficient for everybody involved. But what's fascinating is that DeFi actually sits on top of Ethereum for the most part, right? Which sits on top of also a lot of stable coins, all right? Which, by the way, stable coins as we know them, like Tether, are no longer kind of backed by cash assets. They're backed by kind of what we call cash and cash equivalents, which could be crypto, which could be debt instruments that are heavily tied to the crypto space. So all you really need to understand here, kind of like the mortgage industry that bust in 2008, what was so dangerous about that made it too big to fail was that it became so complex and so intermingled between cash, debt, financial instruments, right, that the entire world couldn't even figure out how to unbundle it all, to where when one asset class, which were mortgages, started to come down, it essentially started to take down the entire global financial system. That's exactly what is happening right now with decentralized finance, in that decentralized finance is commingling so much of what we know about how the financial world is tied together and the assets that back it and the debt that backs it, that the larger the DeFi market becomes, okay, the more this world becomes too big to fail, because we don't even understand the implications of it, right? We barely understand the implications of it right now, and we're just getting started. Could you even imagine if we slowly grow this asset class over the next 5 to 10 years? Now, understand this when it comes to DeFi, and this gets to my trade, guys. You know, a lot of my trusted sources in the space on Wall Street are telling me the one thing that they've seen over the past few months, and I think this is not talked about enough, is traditional talent, financial talent, people that are at the top of their game on Wall Street, in the banking system, a lot of the young financial minds in finance are all moving to the Ethereum platform in terms of the DeFi movement, okay? They all kind of either the same way that kind of crypto kids who don't have any experience with finance were very early on kind of just buying crypto and at a very basic understanding, wanting to get part of this movement because it's become a subculture for them. The finance kids are seeing DeFi as their future the next 40 years. It's where they want to work the next 40 years. They don't want to work for the big bank, or if they do work for the big bank, they want to be on the bleeding edge of DeFi. So when you see that type of a talent suck that's getting moved all to the Ethereum network, that to me is the biggest sign for wanting to invest in that kind of platform, right, the next 5 to 10 years. So what I did as part of this is it woke me up. Like events like yesterday, what they really do is they wake you up and they're like, okay, I was thinking about doing something, now's the time, right? Like my gains were so large in Bitcoin that I just didn't want to, and I had like the Bitcoin Trust, which is like fully taxable, obviously. It trades, trades in my brokerage account, that I was kind of hesitant to sell that because I was like, do I really want to take that tax hit? Well, yesterday was an opportunity for me to say, you know what, it's down pretty low. I'm still up huge, but if I'm ever going to move my money out of this, now's the time. I took some profits and I said, this is when I want to do my rebalance. I have rebalanced
because
my portfolio.
What you're looking to buy has also been hit hard too.
But right? I wasn't it. But yeah, it was also hit hard, right? So I sold. Prior to yesterday, I would say I was probably 75% Bitcoin, maybe 15% Ethereum, and 5% other stuff. Like we have Doge, I have some crap coins, I have some NFTs, I have stuff that I just enjoy. I have some, those are like the big bets on who the hell knows, right? More social arb stuff than anything else. As of today, I'm moving to be, I want to say 65% Ethereum, okay? About 25% Bitcoin, and 10% other highly speculative stuff. But I did something else that is super unconventional and might seem a little weird for this episode. I sold Coinbase as well. I'm out of Coinbase right now completely. And I took some of the excess capital that I had in crypto temporarily. The crypto market imploding yesterday kind of also, in the last few days actually, helped kind of implode the market in general, and it kind of helped brought down prices of some of my high conviction equity trades. And I just wanted to take this opportunity to kind of temporarily put more of my cash, because everything's a trade-off, right? Every dollar we invest is at the opportunity of investing in something else. And I just feel better right now, quite honestly, than I ever have in my number one highest conviction investment, which I know it's a crypto episode, which is Molson Coors, TAP, right? So I actually went deeper into Molson Coors yesterday, way deeper yesterday, and so far it's working out really well. I actually went deeper almost when it hit the very bottom yesterday morning, and I just bought a bunch more Molson Coors, a bunch more TAP. So that's money that, I am not going to have in Molson Coors for more than weeks to months. And I'll eventually pull out and probably put back into the crypto market. Dave, I actually am pulling some margin money out right now. And I'm going to take that money and invest it in probably straight Ethereum, straight Bitcoin. I hate doing these trusts. I hate them. So I hate paying money, a fee to invest in crypto is insane. I hate that. I want to get out of that. This is my opportunity to get the hell out of those things and to get more into just straight Ethereum, straight Bitcoin.
You're going to pay a fee to invest in those.
Not an annual fee. Not an annual fee. Not an annual fee.
A management fee for them to put your money in something like that is not.
It's sick. It's disgusting.
Not at all.
So
worthwhile. I was sitting on an airplane buying my $50,000 of. I bought both of them. I bought Ethereum and I bought Bitcoin. Megan is sitting next to me. She said, "I just bought $100 of Bitcoin," and I said, "Good for you. I just paid $750 in fees to make my Bitcoin transaction."
Wait, you did it on Coinbase Pro, right?
Coinbase. No, I'm just on regular Coinbase.
Don't ever use regular Coinbase. Just use the Pro. Coinbase. It charges you like a tenth of the fees, Dave. That's insanity. That's actual insanity to use regular. It'll take you 5 minutes to download Coinbase.
I didn't have my Coinbase Pro set up. I had the app download. I have an account. I just didn't have it funded. I didn't have my bank account linked, and I already have traditional Coinbase. I have all the highest limits already. So for me,
guys, for those of you all saying not to use Coinbase,
that's where I kept it.
We are in Texas, and it is exceptionally difficult to trade in Texas. I have tried. It is so difficult to trade on the other exchanges. Most of them are illegal here. They don't even let you trade on them here. It's exceptionally difficult in Texas. That's all I'm saying. I'm not saying there's not a way, but it's really difficult to trade in Texas outside of Coinbase Pro right now. So just understand that's part of the reason why a lot of the exchanges that you trade through, guys.
I have a Kraken account. I have I have all of them. The Gemini. I consolidated everything to Coinbase when I was trying to make my 60-40 split Bitcoin Ethereum, and now I'm moving more to like a 50-50 split, maybe even I might topple that like you did and go 60-40 with Ethereum as my primary holding. I haven't made that full move yet, but I think I'm going to stick around 50-50 for now.
So guys, I want to reemphasize this. If you don't believe in like the fire of the community and their ability to kind of listen, regardless of what you think about crypto or Bitcoin or Ethereum, to me, I don't care. I'm not part of the movement. Let me make that very clear. I'm not part of the movement, okay? But I study the people that are in the movement, and I have come to the conclusion that they're not going anywhere easily. Now, could I be wrong? Yes, but that's my thesis. My thesis of studying the psychology of people that are propelling this movement and the age of those people and what it means to them and just the anger that they have towards the structural, conventional, old world finance institutional entity that has screwed them. Because quite honestly, they have been screwed, whether on purpose or not, in so many ways by what we have done with fiat currency, and it makes me sick. It makes me sick. And I've benefited from it, right? I have benefited from it probably more than 99.999% of people in the world. I benefited from it. So I understand the anger. It's disgusting.
Well,
It is disgusting.
Just so we know, I mean, like if we had a gold-backed currency, that's not a panacea either, right? Like there's
Jordan,
definitely issues either way. Like,
It's
so
not about having a fiat
Right.
currency. I don't have any issues with fiat currency. It's what we have done with it. The decisions we made with the fiat currency over the past X number of years, because we are so freaking spoiled.
In the government's best interest, right? And it's their currency, and so they've chosen to do what they're going to do, right? And so that's
I don't think it is in the government's best interest.
It is, right? So that's
I don't think it is.
Debased to be able to pay your tax, to be able to pay off your debt, right? So that's what they do. That's what they do.
It's in. Listen, I understand that. I'm not even saying that I blame them necessarily. I'm just saying whether they perceive it to be in their interest or not, it is a short-term. They've been making short-term decisions, and when governments make short-term decisions, and I understand we live in a flat world, so it's very difficult when other large governments are making short-term decisions for a single government, no matter how large, to make a long-term decision, because you can't, like, to a certain extent, you get screwed then, right? But by everyone continuing to pile into these short-term decisions and compete with one another to protect their wealth, okay, short-term,
it's not wealth protection, right? So it's growth protection, and it's trying to avoid depressions, right? So that's literally what they're trying to do.
Bullshit.
They do all this stuff.
Bullshit.
100%.
Bullshit.
Do you read about this stuff? Like, do you read about
yes,
this stuff? I don't think
I absolutely do. And at the end of the day, Jordan, it's a few people making that decision, and we will never know if it was the right or wrong decision. We will never know because we can't gameplay them not making that decision.
That's what a decision means. It means you cut off all the other possibilities from happening, right? So
Jordan, the decision that was made last year was disgusting. It was wrong. Okay, in my opinion, it was wrong. Okay. It was freaking insane, okay? We did not need that much money. We did not need the stock market to pop back instantaneously after the worst thing that ever happened. There was a more pragmatic decision that could have been made, that even if you say take the same thing they did last year and cut it in half,
how are you to know
it would have been
was the wrong
plenty
decision,
good.
though? You don't know the macroeconomic effects of letting the U.S. stock market linger in.
Dave, none of us know.
Twice as far, yeah, you don't.
For sure.
You can't say that was the worst decision.
I can say that I think it was. I can say that I think it was.
I can say that I'm glad that they did that for my personal net worth.
They're never gonna choose austerity in a situation like this. It's unpalatable.
Jordan, it's not a decision between austerity and increasing
100%.
the money supply by 35%. How about just increasing it by 15%? How about just increase it by 15?
You didn't get to make that decision.
Exactly.
Neither did I. They didn't ask for my opinion. Right?
The people making those decisions are pussies. They're pussies. Okay. Period. Period. No, I'm just telling you they are. They are.
That was inappropriate.
Sorry.
I'm just going to be checking our comments now.
The people making those decisions.
By the way, Jenks is wondering if he can moderate.
Jordan wins the debate. According to the comments.
Anyway, listen, I'm going to tell you right now, the second those decisions were made, anybody with half a brain that was in institutional Wall Street, and I spoke to many of them, all were laughing their butts. Everyone was like, dude, this is going to be the biggest moneymaker of all time. This is so insane. Nobody understands and that's when all the funds, including myself,
we were on.
I went 80% in margin.
We were on telling what we were trading, how we were making, how we were doubling our net worth just in a month. I mean, we were a part of it. I mean, we were benefiting from the decisions that were made.
Totally, 90% margin.
You wouldn't even
roll with it.
Financial charity. Yeah.
No. I mean, listen, like I said, I have benefited more than anyone has benefited from it, because I was like, this is disgusting, and now I have to do what I have to do, which is make disgusting money off of the ripoff of our future generation, because we don't know how this is all going to end. And you know what? I don't even know what happens when the whole world eventually moves to another too big to fail global asset class that sits outside of the control of world governments. Where does that take us? This whole thing could end up being a disaster for the world. I have no idea. All I'm saying is, I'm not saying whether I believe in it, whether I think it's good, or bad. It's just another unknown thing that's going to happen now. What I do think is that there's an opportunity to profit off of it. Because, like, for me, I can't make those decisions, Jordan. I can't make them. All I can do is try to make as much money as I can for my foundation and try to cure pediatric leukemia 10 years earlier because I'm dumping tens of millions of dollars to scientists to help them cure it. That's all I can do in life. I don't care.
All I'm going to have to say is the next time you get this passionate about a topic, I'm going to ask that you turn your volume down on your microphone because people are saying you're super loud, but they agree with you. Another saying that they feel bad for your cat that is locked in that closet with you with all that yelling.
In here today.
By the way, we have had dislikes.
I'm not even going to try to put comments on the screen today because it would just blow up my internet. But
the really bad word. We had the
sorry,
jump up.
I lost.
Look, I choose not to. Things I can control.
Convincing
is
by
saying
screaming.
Profanity. I can control that.
Sorry, when I start going back to last year and I start to think about what we did with our monetary fiscal policy, that to me is something that will always stick with me, and it really bothers me because I just know how rich all of the world's richest people are getting as a result of that policy, and we get rich for nothing. We get literally just by being. Listen, here's the funny thing, guys. What I talked about, I've been talking about this for 10 years. When you have risk capital, the people that have the most amount of risk capital are rich people, right? Because once you get to a certain point, you can only spend so much money. I mean, you can only buy so many yachts. I mean, you can only buy a house so big. So what inevitably happens is that some portion of your net worth just gets thrown into risk assets. They could be businesses, startups, the stock market, all the above, right? They just get thrown to risk assets. And when stuff like this happens, risk assets just go through the roof, and you're not, I mean, it's just, I don't know, dude. Nothing about the last year felt right to me.
From the comments from Eric that I think that is a good one. If you're anti-tax, why do you hate wealth disparity? Like, give the correlation.
Who said I'm anti-tax? First of all, yeah. So I want to make something very clear.
I think you're a fair, appropriate tax.
Yeah. I'm never about more tax or less tax or the taxes right now. There should always be the appropriate tax. The appropriate tax in certain points of our history maybe should be higher. Sometimes they should be lower. I'm kind of more focused on productive use of tax dollars than the tax itself, right? I think most people that pay a lot of taxes, I think when you really have deeper conversations with them, if you could convince them to a better, more efficient use of their tax dollars, that it would be used correctly, I think most of them would be very happy to pay even higher taxes. Like for me, I'm not at all I'm not at all against taxes. I think in my foundation, one of the things I'm most worried about is as my foundation grows and I'll start making larger donations over the next few years, I'm really nervous that I'm going to donate to the wrong organizations that don't use that money productively and that they don't use it efficiently. So for me, I'm going to be all about really spending time focused on giving the money to organizations that use it in the right way, that can use it efficiently. They'll probably be
finding those smaller organizations where you know that every dollar is actually benefiting another human versus the infrastructure of a large charity, right?
Yeah, but listen, when it comes to wealth equality, like I've been thinking about this almost my whole life, or especially the last 10 years when wealth equality has been a big issue. I truly believe that simply by bringing the entire world into the investor class, which is what this show is all about, simply by doing that and that alone, you essentially flatten out the wealth disparity, right? Because by having everyone in the investor class, that essentially flattens out the distributions of investor class assets and the benefit of everything that happens inside the investor class. So that naturally starts to solve a problem, right? And very organically, very naturally, it solves the problem. So to me, there's no perfect solution, but I think the best solution to solving the wealth problem is simply by bringing the world into the investor class. And then it gets really hard for certain segments of our economy to kind of scoot around other segments. And when things like this happen, at least we all benefit relatively equally, right? And so That's all. So, God, Jordan, have you done anything differently as a result of yesterday? Listen, I know that you have spent more time than you ever have thinking about this, and you, out of all three of us, you've been more focused on I don't necessarily believe in the crypto movement, but that hasn't stopped me from investing in it and benefiting from it. I think you're more emotionally attached to only investing in things you believe in that present a real utility, right?
I don't have to believe. I don't have to believe. I mean, it's not. It's not a religion, right? I mean, some people treat it as such. Maybe I invest in companies, right? And so I don't. I'm not a commodity investor. I'm not a currency investor. So some people lump it into either one of those things, and that's not the type of investor I am. So I just still choose to not. It's not my jam. I spend currency, and I spend it on equity in companies. So it would make no sense for me to let it sit in a currency.
Yeah, and I don't see it as a currency trade or a commodity trade or a collectibles trade even. I see it as almost a social arb trade because there is such a movement happening behind it. Whether it was Bitcoin, if all of a sudden, I don't know, plutonium trading became a thing. All of a sudden, even though I don't know if there's a market, I don't even know how that works. But if that became the thing that everyone was talking about, I would be looking into it as an investment opportunity.
Yeah, look, I mean, like I said, I invest in equities. I've been thinking about maybe buying some Coinbase since I do invest in equities. Maybe they're able to capitalize off the crypto market from people buying and selling and trading these things. So maybe that's one way for me to, get exposure to this. But I don't see myself sitting in a cryptocurrency. It just doesn't make sense for the way that I invest.
And listen, for me, the easiest way for the best bull case for crypto markets in general, it's always going to come back to, utility or not utility. It doesn't matter for me because gold. We are not recreating something from scratch here. There is a precedent for what the crypto market is. If you simply look at the gold market, the total valuation, I think some estimates are as high as $10 trillion. In my mind, there's no way that something can't eventually completely replace the gold market in terms of market cap. And when I think about something that ranges between $4 and $10 trillion, depending on who you're asking, I absolutely see that as just a benchmark that is just kind of assuming that the crypto markets can hold itself together and it becomes some ridiculous store of value, even if it never provides any utility really ever. I think that it absolutely becomes the digital gold because I don't see people in 100 years, 200 years, assuming that we're still on Earth, really caring about gold when we live in a completely digital universe. I just don't see it. I think that is so naive and ridiculous that anyone would care about gold as a store of value at that point. And so
I'm just having a hard time with crypto being the store of value. That's not what the way I view it is that it is people are like, oh, it has no utility. I think it does have utility. I think the blockchain has utility transactionally. I think it makes a lot of sense. I like the DeFi movement. I think they're doing interesting things. Like I said, I just don't feel I don't let dollars sit around just the way I'm not going to let Bitcoin or Ethereum sit around. If I wanted to transact in something that could only be bought in Ethereum or Bitcoin, maybe I would use that as a medium that makes sense in some way. But I'm just not going to let things sit in Bitcoin. It just doesn't make sense to me.
Okay, but Jordan, you have to understand that the entire gold market is purely based on psychological BS.
That's fine, but again, I don't invest in gold, right? So to me, that's not a good analogy.
Okay, because
I feel like you're trying to convince me, this is kind of what I see in the crypto space, is that it's people trying to convince other people to buy crypto, right? To where there are a lot of really, big people that have a belief in it, right? But then I talk to friends and they're like, oh yeah, I got a Bitcoin wallet. I'm just playing around, seeing what happens. I don't know anything about it, right? That's most of what I hear, right? But then I hear some really educated, like Leon, spends a ton of time researching this stuff, has a really good head on his shoulders, understands the space really well. But again, that's not the type of investor I am. I'm an equity investor. And so if I look to capitalize on the crypto movement, it'll be through a Coinbase or some other company that I can invest in.
Okay, but what I'm saying is there's an ARB opportunity here when we think about the psychology of the world's money, not your money, of the world's money. We have to understand how that works. And there are institutions and individuals and family offices all around the world that control trillions and trillions and trillions of dollars. And they, for the most part, most of them have some allocation of their trillions and trillions of dollars to something that is so stupid, which is gold. And that's why the gold market cap today sits at between $5 and $10 trillion. And what I am saying is that there is a natural, sensible narrative that says, when someone is 20 years old right now, when they become 40 years old, and they are controlling their family office of $800 million or $2 billion, or the institution that is going to be controlled by an 18-year-old in 20 years from now, that mind, the way their minds think, the way they understand the future, the way they see things is not the same way that a 50-year-old imbecile thinks about this today. It's the way a 50-year-old imbecile will think about it in 20 years, right?
Let's not just throw people under the bus because they're a certain age. I mean, that's not a
bullshit. No. I will throw them under the bus for age, because age means something. 50-year-olds do not think the same way as 18-year-olds. Period. They never have. They never will. There is something about age that is meaningful.
Call him imbecile. We can. There's other things to say, but I mean, there's no reason to.
Okay. What I'm trying to say is that the entire concept, to me, of having a store of value in gold, I think is a ridiculous idea. All right, period. But the bottom line is, people, when they have a certain amount of wealth, they just do things because, you know what, why not? It's like the 1 in a million situation where, the world's fiat currencies go down and now the only thing of value is going to be gold. Fine. Okay, fine. Jordan, that's what drives those decisions. I have had these conversations with family offices for the past decade. That's the way they think. They think about worst case scenarios. They want diversification. It's about wealth, retaining wealth, not about making money. And it's about de-risking. And they have no idea if the world is going to end and fiat currencies go away and we're all living in villages trading bits of gold and silver. It's so that.
Well, look. I mean, there's risk in anything, right? And so there's risk holding dollars, there's risks investing in debt, which is like probably the least risky, right? And then there's risk in investing in crypto, right? We saw a 30%, 40% drawdown in a few hours, right? There's risks in equities, right? Because we know that we see big drawdowns all the time. So I mean, there's no risk-free way to invest, right? Except for maybe the risk-free rate.
But think about the ARB. Think about age ARB. Age ARB is what I'm trying to talk about right now. And right now, what I'm trying to say is the world's wealth that is being controlled by 45 to 60-year-olds right now. They are making the decisions on behalf of family offices and institutions. They will age out. Period. That is a guarantee. And the people that will be in those positions in 20 years will be the minds who are obsessed with the concept of digitization, decentralization, crypto today. That is, I think, a fact. So unless something major happens in the next 20 years that totally changes the way that we think about this, that and that alone, to me, is a case to ARB age. Okay? And that's why I see, even if no utility comes into play with crypto markets, that I see crypto, I don't know if it's Bitcoin or Ethereum or something else or just an aggregate all of crypto, but I do see crypto as the most likely replacement for this kind of ridiculous, de-risking, worst case scenario, what if, everybody's doing it, it's too big to fail, I gotta have some part of my $800 million portfolio in it, right? I mean, like that's all I'm saying is, instead of people's go-to being gold in 20 years, I'm saying that people's go-to will likely be crypto markets. I think it's a good thesis. It's not guaranteed, but that's my thesis, and that's part of the reason why I feel comfortable arbing the crypto market momentum over the next couple decades, because I believe they have this worst case scenario, or kind of not necessarily a worst case scenario, but this baseline scenario to where it kind of becomes, I hate the gold market, Jordan, so do you. I hate it. I think it's ridiculous. And that's why I use the word imbecile, not because the people are imbecile. I think that the notion of doing it is imbecile, just imbecile notion to be putting that much money into something that doesn't make money, right? That doesn't have any inherent utility value or doesn't generate anything from it, right?
Does it generate real returns? Is that
exactly, right? So that's all I was getting at there. But what I'm saying is there's a baseline model there that is a fallback model for crypto that I think is pretty darn powerful. And I think you basically win simply by people aging out of those decisions over a multi-decade period. And the people that are aging into those decision roles are going to push those decisions into having a 1% allocation or 2% allocation or maybe higher in the crypto market. So
I just don't see them as the same at all, right? Because gold is kind of an inflation hedge, and then but crypto, you could kind of say that, but it's more of a speculative. It's more like a speculative vehicle.
Now, but in 20 years, I don't necessarily see it. We're at the birth of crypto right now, and that's why it's speculative. That's why it moves in sync with equity markets, because it's a similar mindset, because a lot of people that are investing in it, there's a gambling concept revolving around it. We all know that, right? There's this kind of YOLO aspect to it. People think it's the future, so they're all making bets on it. But long term, if it becomes a too big to fail global asset class, which we don't have a lot of, it kind of it replaces, I think, gold, right? And so I just see that very clearly. But Jordan, I agree with you. It's not what it is today. It's not an inflation hedge today. But I think we can't think about what it is today because in 20 years it looks very different the way I see it all playing out. So it's just a thesis. Listen, it's just a thesis. This show is about our thesis on why we're making these investments. And I don't want to come on here like so many other YouTube shows and be like, oh, I did this, I did that. Like, I want you guys to truly understand, because I spend every waking hour thinking about this stuff. This is the thesis behind the decision. If the thesis is wrong, the decision's probably going to be bad. But it's more about the thinking. You have to play out scenarios, right? We always talk about scenario modeling. So in my head, I am modeling out scenarios for this year, for next year, for the next 10 and 20 years. And they could be wrong, they could be right. But I'm modeling out scenarios, and I'm picking the scenarios that I think are most likely based on what people aren't or like misjudging or aren't really fully appreciating. Because with all the crypto noise being so short term, I think people don't pay enough attention to these larger themes. And I will say this, a lot of institutions, when I've read the institutional research on crypto, on Bitcoin, it's actually pretty close to what I'm saying right now. Like, this is how the really big money is thinking about crypto. The reason why they're coming into it is not because they believe in crypto. These are the narratives that the multi-billion-dollar funds are running through their models right now of like, should we be thinking about allocating to crypto? Should we think about talking to our clients about allocating, or when should we think about it? This is how they're not out there saying, oh, crypto is a better way to transact or it's a future. They're trying to model how it all plays out, whether we agree with it or not. Because I can tell you right now, if we were having a sensible conversation 80 years ago, we wouldn't be, or 60 years, 50 years, 40 years ago. It's not like, oh, gold, man. Gold. I mean, it's just like most of the people invested in gold, just so you know, hate gold. Most of the institutions that are invested in gold, most of the family offices that have 2% allocation in gold could care less. They think it's such a waste, but they're like, you know what? We have $400 million. We have $1 billion. Like, it is what it is. You know, like we don't know, but like it's just what everybody does. It's just it's part of the diversification norm, right, for institutional capital in this world, right? And so you have to understand that's where big money flows. And the future of crypto's success or failure is going to be determined upon big money flows, okay? It's determined upon big money flows. And so if you don't understand the narrative and kind of the psychology behind how and why big money flows into these sorts of assets over a long period of time, then you can't really run that type of scenario modeling. And I think that's what I want to get across today is this is how we're thinking about crypto. This is the unconventional way that we're thinking about. We're not knee deep in all the BS yesterday, the noise, right? Like this is what we're thinking about. We're thinking about.
Yeah. So I don't know if I'm even still on, if my internet has been.
You are.
going
You
in
look
and out
great,
so
by the
much
way.
here. Oh, good.
Oh, and then you just froze.
I switched to a different provider. So I just want to make sure we covered everything that we were planning to talk about. The crash, too big to fail, our move from Bitcoin to Ethereum. I don't know if I'm still here. Our unconventional trades, monetary policy scam, trader psychology. Was there anything else we wanted to talk about before we sign off?
Yes.
Because I also want to remind everyone that there's a new Hey There Dave here coming today that is about crypto, about NFTs, about video games and in-game NFTs, and you're not going to want to miss that. So if you aren't a subscriber to my other channel, youtube.com/HeyThereDave here. You've got to subscribe, turn on notifications. It should be out today. If not today, it will be out tomorrow. So you must turn on notifications and watch it early, like, subscribe, do all the things. Leave me
three
comments,
things.
Help the algorithm.
Dave, so that's what you were doing the 3 days that you barely answered anyone's calls this last week. Now I know
That's right.
doing another.
That's what I do.
Okay, fine.
You always know that I'm making a show when I stop responding. Oh, and also I was on an airplane, and my normal cell provider doesn't work here, so I'm on a different phone number. That weird number that you got from me yesterday, that was me in Mexico.
And he had tacos and margaritas last night.
Well, I want to ask you about that in a minute.
I love it here. I love it here. I'm moving.
Hold on. Don't talk about Mexico yet.
Okay.
I want to ask you about Mexico in a minute, but before I do that, I want to tell everyone that tomorrow on the Dumb Money Discord, Friday at, I think is it noon Eastern, or is it noon Eastern or 1 Eastern, 1 p.m. Eastern?
I think it's 1 Eastern.
Yeah, dumbmoney.tv/Discord. We will have like a clubhouse style chat with our first kind of dumb money TikToker that we put on the old channel, Kayla. I have some questions for her. I know you guys do as well. Like, the more I watch of Kayla, I'm like, I don't understand how a lot of these young kids think. I feel like they're missing out on so many opportunities. I have some, I don't want to call it like hard questions, but I'm gonna probe a couple things that I just don't understand why they're at like the intersection of so much of what we do.
This is like a voice chat that's going to be happening on our Discord. It's kind of like a clubhouse type thing. She's going to be on stage. You're going to be on stage. Leon's going to be moderating. I'm going to be listening. If I
also, I want to say that we have two more creators. We're working on their shows right now. Maybe we'll put them on as early as next week, and so we'll have that coming up. I also have 5 new Dumb Money social ARB episodes that I'm going to be brainstorming with Jordan and Dave, and we're going to pick at least one of those, maybe 2, to do next week. And so I'm really excited about all 5 of them. They're traditional social ARB trades. Some of them came from our community. I've been knee-deep researching them. There's so much social ARB opportunity right now. I've never been more excited to be a social ARB investor. So please, if you're watching today, give us a thumbs up, but also hit the notification bell, because you're not going to want to miss these episodes. I'm working really hard on the research. I know the community is as well. But I want to ask this, Dave. I think Mexico City, I'm too scared to go to Mexico City, but like, can you just, I live through you right now. Tell me about, like, just what has it been like? You got there yesterday.
It is amazing. I've never been to Mexico City, and in my mind, it was just going to be a crowded, noisy, busy city that just goes on for forever, which flying in, I was still under that impression. My Uber to the Polanco neighborhood, which is like this beautiful area. I'm in an Airbnb that's right on the edge of a park, that you walk down this park, and then like these little side streets have cafes, and like everybody's out, and it's so peaceful and quiet, and walking their dogs. And I was having margaritas and tacos, and just, it was so good. There was a place if you haven't been to, I think it's called Lemon Tour. I don't know, something like that. Lemon Tour is what it looks like. And their margarita was so good that Chris Camillo, you need to get out of your cocoon and come to Mexico City just to get that, okay? You will love it.
If there's one thing that would get me to Mexico City, it's the world's greatest margarita that you're pitching me right now. I'm all about that.
And there are tacos there. We were having it's kind of like, you know how I am a big fan of Mexican food? Well, here it's just food, and I love it.
Just food.
Are you like at a hotel, or are you staying in an Airbnb, or what? You at an Airbnb or a hotel?
I'm in an Airbnb. There's a real delay problem. I don't know if I'm on. I'm on an Airbnb, and I am right in this beautiful neighborhood. It's like, this is where I want to live. Like literally right outside. I'm one step away from this beautiful park that has like this reflecting pool and all this nice landscaping. There's a statue, a giant bronze statue of Abraham Lincoln and his chair. It's weird. I'll take pictures.
So why do I always hear about like people taking bodyguards with them when they're going around Mexico City? Because you never know when there's going to be like a adult napping, it's kidnapped.
I'm sure that exists in certain parts, and the police presence is visible, but it's all it's so. I thought it was going to be kind of like big city when you go to Manhattan. It's just like people and horns and just like that. I was expecting that vibe, and I'm sure that vibe exists. I'm sure people are just laughing at me who are familiar with Mexico City, but the neighborhood I'm in, it is like think of the tranquil parts. Think of Central Park, okay, where it's just a tranquil oasis within a big city. That's what I feel like, and it's just so chill. I had churros last night at 10:30, and I couldn't get to sleep because of all the sugar, and it was so good. And then after churros, we went and sat on this other little patio and had a glass of wine. It's just this is really a lifestyle that I could get behind.
That's awesome. Oh, by the way, I forgot, when we were discussing our unconventional trades, crypto crash trades, it really was the crypto crash that made me think, what are people doing as a result of this that maybe no one's thinking about? And I was thinking they've got to be drinking more, right? This would drive people to drink. And I did a Google search trend chart on happy hour, and sure enough, like the last week had like a 90-day pop in happy hour that was, considerably higher than the last 90 days worth of weekly happy hour. So I do think but it did make me real.
Mix a crypto crash with a market crash and a reopening, and everyone wants a happy hour.
It just made me think that no matter what, like I have a hard time. Other than the aluminum shortage, which I'm hearing some rumors about, that would be bad. Other than something like that would affect supply, like I'm having a hard time finding a narrative right now going into the summer that doesn't help molten cores and tap, right? Because it's like okay, crypto markets and the stock market's down and like crypto's down, so all the kids are going to go out and just, we can at least go party, right? So like no matter what, like I think molten cores might be winning. And by the way, you see that press release? They are quadrupling their manufacturing facilities for slimline cans in Canada, just like they did in the US. They announced that yesterday. Which, why are they doing that unless they're selling really well in Canada? And it's not even about Topo Chico in Canada. It's about Coors hard seltzer, and that other one that they sell up in Canada.
All of those alternative products, all of their innovative products are served in the skinny cans. So it's just a sign of the times.
But that's what's so amazing. They just started selling hard seltzer, they said, in Canada in like March or something. I'm like, dude, that's... Anyway, so... Again, nothing but great news, and I'm still super excited about that trade. And listen, there's a bunch of others. We'll talk about them, at least one, maybe two of them, next week. Dude, Dave, have a ton of fun in Mexico City, dude. That sounds great.
I'm about to head out. It's beautiful day here. It's sunny. It's cool. It's currently, what is the temperature? Like it's like perfect weather. It's 72 degrees and sunny.
Dave, you picked the best week because it is so miserably terrible in Dallas. It's raining outside. It's going to rain all week. You literally picked the best week to leave Dallas. You're not missing anything here.
Well, I'm going to be gone pretty much all summer.
Okay, well, tell us.
We're going to...
Your remote studio, don't worry. By the way, I saw Dave's. I went to his house and checked out his remote studio. It is the coolest thing I have ever seen in my entire... How long did it take you to build it, Dave? Like 12 hours? 20 hours?
Off and on for... I worked on it for like a week, and every day I had like 7 more packages from Amazon. And Amazon sends one wire, one thing like this in its own box. Sorry, environment, but this is so dialed in. I set up the whole studio in the time it took Megan to brush her teeth last night. Of course, testing the internet took about 2 hours, but the studio is so easy. I love it.
It's in a box. He built the world's most sophisticated broadcasting studio in a carry-on crate that opens up, and in 30 seconds it's set up and ready, completely ready to go. So impressed. But you'll have to hit the notification because we never know when Dave's going to call us and be like, I can do an episode tomorrow with it. Oh, wait, hold on. Hold it still because it's all blurry. It's way blurry. Hold it back further. Oh, yeah, there we go. You can. Oh, there you go. Yeah, right there.
As long as my eyes aren't on the screen, I think it'll work.
Yeah, that's awesome.
But anyway,
all right.
That's what I'm seeing right now.
All right, we'll let you go, dude. Hey, guys. Glad we all survived the crypto crash. I look forward to talking to y'all tomorrow on our dumbmoney.tv/Discord. If you're not a community member in Discord, please join Discord for sure. And also, if you haven't subscribed to our original Dumb Money channel, that's where we're bringing all the new creators on. So please subscribe. YouTube.com/dumbmoney instead of Dumb Money Live, which is where we are now. And hit the notifications there so you get notified when we launch those next episodes. Dude, have fun, Dave.
That's it. We're Dumb Money. We will see you here very soon.